Welcome to the deep dive. Okay, today we're going to cut through, the usual corporate speak in the Adecco Group's latest annual report.
Yeah, try and pull out the really important bits for you.
Exactly. Our mission is basically to give you a shortcut to understanding how a huge global company is navigating this whole future of work thing.
And it's a fascinating area.
So how does a major player in HR like Adecco balance, all this fast-paced digital change with, well, staying focused on people? Let's unpack this.
That's really the core question, isn't it? Because this report, it gives us a pretty comprehensive look at their strategy, their financials, and, their actual impact on people and society.
Right.
What's really interesting, I think, is how it shows a company that's not just reacting to these massive global shifts, tech, workforce needs, all that, but actively trying to shape them.
Mm-hmm.
They're a leader in connecting talent and opportunity, so their strategy, it kind of paints a picture of the whole employment landscape today.
Absolutely. So let's dive into that strategy then. Their basic vision, it seems to revolve around, well, enabling sustainable, lifelong employability for people.
Right. For individuals.
And also helping companies get the best out of their talent. So for you listening, this means they want to be a key partner, in your career and for businesses.
Yeah, organizational effectiveness.
But how are they actually, making that happen? What's the plan?
Okay, so they're doing it through their Future at Work Reloaded plan. They kicked this off back in November 2022.
Sure.
And it's built on 3 pillars: simplify, execute, and grow.
Simplify, execute, grow.
Got it. So starting with simplify, this one's all about making their own organization more effective, streamlining how they operate.
Making things leaner.
Exactly. They set a target, actually EUR 150 million reduction in G&A costs, that's general and administrative, by mid-2024.
Wow, 150 million? How?
Well, one really concrete example is their IT systems. They used to manage, get this, over 40 different front office systems.
40.
Yeah. And they've managed to bring that down to just one
How on earth?
through integrating data onto a single cloud platform and streamlining their ERP systems. The big software that runs everything from finance to HR.
Okay, that's a huge simplification project. Makes sense. What about the other 2 pillars? Execute and grow.
Right. So execute is more about pushing decision-making down closer to the local markets, closer to the customers.
Making them faster, more responsive.
Precisely. More agile. And then grow is, well, it's about what it sounds like aiming to gain market share. But they want to do it by balancing revenue growth with EBITDA growth.
EBITDA earnings before interest, taxes, and amortization. So profitable growth.
Exactly. It's a measure of that core operating profit.
Right.
So if you tie it all together, the whole strategy, simplify, execute, grow, it's about becoming leaner, faster, more responsive, ultimately to serve their clients and candidates better.
Okay, that operational focus is clear. But this is a people business, right? So how does all the strategy stuff actually impact the people they place and their own employees?
Yeah, good question.
Their scale is just incredible when you think about it. Nearly 450,000 people placed in flexible jobs daily.
Daily, yeah, excluding joint ventures.
And over 170,000 into permanent roles over the year. But what really jumped out at me was the skills investment.
Oh, the upskilling numbers.
Yeah, over 883,000 external individuals upskilled or reskilled just in 2024. That's massive.
It really is a remarkable number, and it points straight to that commitment they talk about, human centricity, which is, pretty critical right now with talent being scarce and skills changing so fast, especially with new tech coming online.
So it's not just about filling jobs anymore.
No, not at all. It signals, I think, a bigger shift where large companies like Adecco are actively stepping into the education space, trying to bridge that global skills gap. You have to wonder, are they becoming the sort of new universities for the future of work?
Interesting thought.
And they have some really specific initiatives that show this commitment, like their pledge to support refugees.
Right, I saw that.
They've already helped 30,000 find work and empowered over 5,000 just last year. They've got a goal for 2027, 85,000 employed, and 17,000 upskilled or reskilled.
That's a significant commitment, especially for a global company focused on profit, too. Is this something we're seeing more of, companies taking on these societal roles?
I think so, yeah.
Yeah.
It definitely highlights a broader trend where companies see addressing social challenges as part of their core business, not just, a side project.
Right.
And beyond refugees, look at their inclusion projects. There's the PWD project in Taiwan, helping students with disabilities, 1 in 75 impacted there.
Okay.
In Spain, this Profia project, funded by the EU actually, trained 41,000 women in rural areas in digital skills. 41,000.
Wow.
And in France, these Care and Elocio initiatives, they're developing real-time sign language translation tech, aiming for over 90% accuracy. Think about the impact that could have on workplace accessibility.
Absolutely. It really grounds that human centricity
Yeah.
idea in concrete actions. What about internally? How are their own people and clients feeling?
Well, their metrics look pretty solid there, too.
Right.
They use the Pecan ENPS for employees. It's like a net promoter score, but for how likely employees are to recommend working there.
Mm-hmm.
It's a 20, which they say is 9 points above the industry benchmark.
That's quite good.
Yeah. And for clients, their net promoter score is at 37, which is up 2 points. So both heading in the right direction.
Those positive scores usually point towards a pretty healthy internal culture, right? Which you'd expect is crucial in a service business like theirs.
Definitely.
The report mentions a big group-wide values initiative they launched early in 2024, trying to build a more collaborative, transparent, high-performance culture.
That's right. They refreshed their 5 core values: passion, collaboration, inclusion, courage, and customers at the heart.
Catchy. Is it working?
Well, according to their own employee engagement survey, they are seeing sentiment improve in areas like collaboration, customers at the heart, and courage. So early signs are positive. They also kicked off a pilot program called Empowers Akotas Women in Tech Leadership. Started with 26 women in 2024, specifically aiming to develop female leaders in the tech part of their business.
That's a targeted effort.
It really brings up a key point, doesn't it? In a service industry, aren't these internal metrics, the employee satisfaction, the client feedback, aren't they kind of the ultimate measure of success? It links directly back to their ability to adapt and grow.
Yeah, that makes sense. And speaking of adapting, let's talk about the elephant in the room, or maybe the algorithm in the room, generative AI.
Ah, yes, Gen AI.
It's often painted as this, existential threat to old school recruitment, maybe even replacing the human touch.
Right, the intermediaries.
But Adecco doesn't seem to be running scared. Looks like they're diving right in.
That's absolutely the impression. They launched a multi-year IT and digital roadmap in 2024, and a big part of it is specifically about upgrading their tech foundations and, importantly, accelerating investment in Gen AI to get a competitive edge.
Okay, so how are they doing that?
They've formed strategic partnerships. Microsoft, Salesforce, Bullhorn, the big names. They want to build what they call an AI-powered business.
Sounds ambitious. Any examples?
Yeah, they mentioned rolling out something called the Recruiter Gen AI Suite and expanding their digital delivery engine. Both are aimed at transforming how their front office operates, making it more productive, improving the customer experience.
So using AI internally for efficiency, but also externally.
Exactly. And they've got some interesting pilot programs, too, like the Akotas AI platform for education running in Australia.
Education, how does that fit in?
Well, it's designed to help teachers, actually, reduce their workload by cutting down lesson planning time, which hopefully enhances student learning, too.
Okay.
What's really compelling, I think, is that they seem to view AI not just as a way to cut costs or speed things up, but as a tool for workforce development itself.
How so?
By using it to identify skill gaps more accurately, and then targeting their upskilling efforts much more effectively. It suggests AI isn't just about replacement. It's about augmenting human potential, helping people adapt.
That's a much more optimistic take than you often hear, and fits with their skilling numbers we talked about. They even set up an AI academy.
They did, and the numbers are pretty significant already. In 2024, it delivered 169 training programs to almost 15,000 people across more than 12 countries.
15,000 people trained in AI.
Yeah, with specific learning paths like AI for leaders or responsible and ethical AI, it's quite comprehensive.
So what's the overall impact they're seeing from this AI push?
They claim it's leading to higher fill rates for jobs, faster placements, and a better customer experience overall. AI agents are providing round-the-clock support for candidates, and yes, it's cost-effective.
But what about that human touch?
That's the key challenge they acknowledge. Their stated goal is to achieve all these benefits while maintaining human connection at scale. How well they manage that balance, well, that remains to be seen, I suppose.
Okay, so we've covered strategy, people, tech. Let's switch gears a bit to the financial foundations and how they operate responsibly. The nuts and bolts.
Right, the underpinning for everything else.
Let's talk numbers first. Net debt, they report it's at $2.5 billion, which they say is actually ahead of their own expectations.
Yeah, and just to give that some context on their recent performance, revenues in 2024 were down 2% organically, or 3% if you adjust for trading days.
Okay, so slight dip.
Hmm.
across the board.
Pretty much. All their main divisions, Adecco, Acodus, LHH, saw revenues decrease slightly. Operating income was down too, from $632 million in 2023 to $541 million in 2024.
And return on invested capital, ROIC.
That also dipped. It was 9.0% in 2024, down from 10.7% the year before. So, yeah, some headwinds on the revenue and profit front.
But they feel the balance sheet is sound.
They do. They're targeting getting that net debt to EBITDA ratio, a key leverage measure, down to 1.5x or below by the end of 2027.
Okay, so they're managing debt. How does that square with returning money to shareholders, like through dividends? Always a balancing act.
It is. And for this past year, they're proposing a dividend of CHF 1.00 per share. That works out to a 42% payout of their adjusted earnings, which is right inside their target range of 40–50%.
So consistent there. Any changes planned?
Yes,
Yeah.
actually. For 2025, they've updated the policy. It's still that 40–50% payout ratio based on adjusted earnings per share, but, and this is the key change, there's no floor anymore.
No floor, meaning the dividend could potentially be lower if earnings drop.
Exactly. They explicitly say this is designed to help them pay down debt, faster deleverage, and give them more financial flexibility for investments down the road.
Okay, that's a clear signal about priorities. Now, moving beyond finance, what about governance and sustainability? How are they run? How do they see their responsibilities? I noticed their board is 50 men and women.
Yeah, 50% female, 50% male on the board, meeting Swiss legal requirements. And the executive committee is 38% female.
And their broader commitment to responsible business.
It's pretty detailed in the report. Take taxes, for example. They contributed a huge amount, over $6 billion in total taxes paid in 2024.
$6 billion.
Yeah, $6,052 million. Now, it's interesting, only $155 million of that was corporate income tax. The vast majority, over $5.8 billion combined, came from sales taxes and payroll or Social Security taxes.
Which often go more directly into local economies and social programs.
Exactly. It shows their broad societal footprint. And they stress they're committed to responsible tax practices, transparency, avoiding, artificial structures.
Okay. And sustainability,
Yeah.
environment, social impact.
They did their first big double materiality assessment in 2024.
Double materiality, meaning?
Meaning they looked at sustainability issues from two angles. How those issues financially impact their business. Things like responsible AI, data privacy, changing labor laws came up as risks.
Okay, risks to them. And the other angle.
How their business impacts the environment and society. Here they identified opportunities, like promoting diverse employment and, of course, all the upskilling and reskilling work.
Got it. So what did that assessment find regarding, say, their environmental footprint?
On the environmental side, their overall greenhouse gas emissions were down 4% in 2024 versus 2023, and down 22% compared to their 2019 baseline year.
So progress there.
Yeah, although Scope 1 emissions, direct ones from sources they control, ticked up slightly. But Scope 2 indirect emissions from energy they buy dropped significantly, down 50% versus 2019, mainly because they've shifted more towards renewable electricity.
Makes sense. And human rights, ethics, that's obviously huge in their line of work.
Absolutely. They launched a formal group human and labor rights policy in 2023. Their code of conduct is getting refreshed for 2025. Standard stuff like anti-bribery policies are in place.
Do they track issues?
They do. They have a speaking up program for reporting misconduct. In 2024, they logged 294 new cases.
What kind of cases?
Mostly improper workplace conduct, 28%, deception, 20%, and allegations of discrimination or harassment, 26%. They do state, however, that no material cases of bribery or corruption were reported.
Okay. It seems like they're putting quite a lot of structure around responsible operations.
They are. One other thing worth mentioning is social dialogue. They signed a new agreement with their European Works Council in 2024 after 2 years of talks. It's being seen as kind of a benchmark for collaboration between management and employee reps in their sector.
Right. So putting it all together, the strategy, the people focus, the tech push, the financials, the responsibility efforts, it leads to a crucial question. How do they actually incentivize their top leaders to deliver on all these fronts? It's complex.
It is. And their long-term incentive plan, the LTIP, is where you see this alignment effort most clearly. It's designed to reward long-term value creation and keep executive interests aligned with shareholders.
Okay. Standard practice. Any changes there reflecting this broader vision?
Yes, quite significant ones for 2025. While the traditional financial metrics like return on invested capital and relative total shareholder return are still core parts weighted at 30% and 20%.
Okay.
They're adding new types of KPIs, key performance indicators. They're calling them contextual and sustainability metrics.
Interesting. Contextual and sustainability. What does that actually mean for executive pay?
Well, the contextual KPI is going to be net debt reduction, and it's got a hefty weighting 35%.
Ah, linking back to that deleveraging goal we talked about. Makes sense.
Exactly. And the sustainability part makes up the remaining 15% overall. It's split three ways, 5% each.
And what are those three sustainability metrics?
Reducing Scope 1 and Scope 2 carbon emissions is one, cybersecurity is another, and the third is a human capital-focused metric, though the specifics weren't detailed yet.
So they're literally tying top executive long-term bonuses to hitting targets on carbon emissions and cybersecurity. That sends a pretty strong message, doesn't it?
It really does. It demonstrates a much more holistic view of long-term value, embedding financial, environmental, and social goals right into how the leadership is compensated and held accountable. It says these things aren't just nice to haves, they're critical to future success.
Okay, so this deep dive into the Adecco Group's report, it really paints a picture of a company right at the heart of these big global employment shifts, doesn't it?
Yeah, absolutely.
It shows how a major player is trying to navigate, maybe even shape, the future of work streamlining operations, investing big in people and skills, and pretty boldly embracing tech like AI.
And if we connect this back to the bigger picture for you, listening, I think it really highlights that complex dance between purpose, technology, and, the hard realities of financial discipline in a huge global company.
Yeah.
It really makes you think. As AI keeps reshaping industries and the need for new skills just keeps growing, how will companies like Adecco continue to balance that tech advancement with keeping things human-centric? How do they actually make the future work for everyone, as their tagline says?
That's the billion-dollar question, isn't it? So maybe a final thought for you to consider. What stands out to you about how a company like this tackles this constantly changing world of work, especially balancing innovation with that social responsibility piece? And maybe how might these kinds of trends affect your own career, your own organization in the years ahead?